Welcome to this week's Dividend Cafe. It is Thursday afternoon, and we will see what happens with the market tomorrow, Friday, but we're actually up on the week, and it's very interesting to see how things have kind of unfolded. Last week, we filmed the commentary prior to the Friday. We normally do, by the way, and so I kind of do these video snippets. It goes out Friday, and then on Friday, the market dropped close to 400 points. Which was one of the worst days of the year. We actually had several quite worse days earlier in the year and the day after Brexit passed. But I had made the comment last week about this unbelievable run of low volatility and a very tight trading range in the market that had gone back about 75 days and amounted to the lowest range of trading activity up and down in about 100 years in the market. And then on Friday, we broke right through that and then some. The market this week went up 250 points on Monday. It dropped 250 points on Tuesday. So there in 3 days, you had a minus 400, a plus 250, a minus 250. And that was kind of like this January level of volatility come back to the market. We didn't move a lot on Wednesday. It was up a bit throughout the day. It closed down a little bit, not much. And then now today, Thursday, the market was up close to 200 points. So on the week, net, we're actually up 130 on the Dow. And so, yeah, my wish and my comments for increase of normalization and volatility got granted. I doubt everybody necessarily likes it, but I do think it's part of a normal market environment. There isn't any particular catalyst to this. I think the market was desperately due for some degree of sell-off and so forth. And also just kind of a reset of what normal volatility levels probably will be. I expect that this is actually going to be much more normal going forward than what we've had in the last, call it, 2 months. Oil was actually down a couple dollars a barrel this week, nothing huge, but for the kind of market recovery we had a couple of these days, you might have thought oil would have rallied as well, and it did not. So everything really right now is pointing towards central bank action and inaction and things like that. The Fed is meeting next week. The odds of them raising rates a quarter point are higher than they had been. They had dropped all the way into the teens as far as what the Fed futures market was pricing in. And then it had come all the way up. It's settled back down, let's call it about 28% chance of the Fed raising rates next week. My own opinion is they absolutely should, and that they very, very likely will not. I actually think there's no chance they will, but I'm not really allowed to say that because it's a very humbling business, and as soon as you say something like that, it can really surprise you. I have no market opinion whatsoever on if they were to go ahead and raise rates, because I think ultimately the whole market is in the waiting expectation that it will happen. It's just a matter of when. But I don't think that there is a very serious movement to raise meaningfully. You may get a one-and-done quarter point here, a one-and-done quarter point next year, but the need to actually normalize interest rates and provide the Fed a future defense against recession, and just to kind of offset some of the distortive activity taking place in risk assets and in capital markets, I just don't think that's on the radar yet. And we're waiting to get over that hump, and we may be waiting a long time. But along the way, we're going to keep making decisions based on company fundamentals, finding distress, finding things where valuations are not totally out of whack. And there are some things out there in financials and energy still. We still like emerging markets. Fixed income, we're being very industrious right now and trying to find where we think the best opportunities lie there, because certain parts of the bond market are painfully, and I mean dangerously, overpriced. So we're trying to realign backwards, looking into maybe residential and commercial mortgage-backed security bonds, looking into floating rate bank loans. We have a meaningful position there, potentially adding to that, making those decisions in the days and weeks to come. We're going to leave it there for the week. We hope you'll subscribe to the video to get it regularly fed to you, as well as at dividendcafe.com. We'll have a big write-up there this week, as we do every Friday. And we'll look forward to coming to you next week with more of an update. The volatility's back. Enjoy your weekend. USC beat Stanford.